Right. I think with your permission, let us begin. Good afternoon, ladies and gentlemen. Welcome to this webinar of the CFO Board on climate-related financial disclosures. As all of you know, we have been working on several important issues which are relevant and will have a serious impact on the working of chief financial officers and those in the finance function. So this topic today is really something which I'm sure all of you would be aware of, but we have two excellent speakers to talk about the impact. I'm going to be introducing them shortly. Amit Bajoria, Senior Vice President, Finance and Global Controller at Wipro, and Santosh Jairam. He's a partner in Head Climate Change, Sustainability and CSR Advisory at KPMG in India. And the objective is here to share not just the theoretical and the regulatory construct around climate-related financial disclosures, but also some practical experience and examples of what companies are going through in that. And in that order, what I will request is that I will first request Santosh to lay out the context in terms of what this means for companies in India. And then Amit Bajoria, who's led some of these initiatives at Wipro, would share his experience on how the company stood up and rose to the challenge which was created by these disclosures, so that you'll have a real live example to relate to, as well as the larger policy construct around it. So I'll request both Santosh and Amit to make a short presentation and share their thoughts. Santosh will begin with that for about 15-20 minutes, and then Amit for another 15-20 minutes. And then, of course, we'd like to have as many questions and discussions with all of you who have joined in. So without wasting more time, may I request Santosh to begin?
Sure, Pranchal. Hi, good afternoon, everybody. And just hold on a moment while I kind of share my, so I think you have to stop sharing the screen. Yeah.
Sure. Also to announce to everybody as a housekeeping thing, this session is being recorded and we will be posting this on the CFO Board website later.
Yeah. So thanks Pranchal very much for inviting me to present it over here. And as most of the people in this particular call would have realized in terms of how the whole ESG as an agenda is kind of coming in as a cost of capital, and inside that the climate change is one of the critical aspects which is kind of coming in. We are already seeing kind of business models changing. I think only about last week, I think Hummer launched. After they stopped everything, they kind of relaunched with a very good ad with an EV Hummer, and for the first time coming out. So you can see how the business models are changing, and you have also seen how foreign investors are keeping away from fossil fuel assets, oil and gas in India. I mean, in 2016, they moved out of coal in India, and still it is a new entry area for them. So I think with all these kind of things, it is becoming very important and a must requirement now as part of annual reporting globally. And it also adds pressure when in April, we start with the sustainable finance regulation in Europe. And UK is also joining in. So I think EU and UK now ensuring that there is a traceability in terms of where investments are going, and they're going to track it through a kind of a sustainable finance taxonomy. And that pressure is already being felt in Indian companies. So I think it's a kind of an appropriate time, and thanks for providing this opportunity. So what I'm going to do is I'm going to start with the first one. I mean, this happened in January 2019, the world's first climate change bankruptcy. A utility company in the Bay Area filed for bankruptcy mainly because of climate change. And this is not going to be the last one. And it's just the starting point. There are going to be much, much more. What happened here is long drought periods. The trees, there is something called as a bark beetle infestation, which kind of because of the drought area, the utilities power lines started creating fire. And the whole of the Californian fire, what you're looking into, people are suing the company. And, the insurance companies are backed off. And so you can very clearly see how the first of the kind of things are kind of happening around. So I think the important part is to understand that the physical risks around the climate change, and this is one of those things. And of course, rising sea levels would be the other thing, and there would be multiple other things. And then there is the whole of the transition risk. As we go along, we can look at it as to, yes, this is no more a non-financial agenda. It is kind of clearly impacting the company and its performance as well. So the potential impact of climate change in terms of the economy, if you really look at it, we are almost in India looking at closely about a 2070 billion per year in 2100. Now, people can say that that's pretty long, this thing, but things are kind of mounting over that. And India would be one of the key countries where the impact of climate change would be mostly felt. And the first ones in terms of infrastructure is being felt. And it was as early in 2015 when IFC asked us to kind of whether we can kind of do a climate risk evaluation for a dam in Upper Himalayas. Now, when I say that, you can realize why I say that, what happened just now. So you can kind of realize the impact, and we are getting the first inquiries in terms of a port which is being built in the western coast of India, where they want to kind of include climate resilience into the design, because last year was the first time when Arabian Sea for more than 100 years saw more than 4 cyclones. Bay of Bengal, it used to happen, but in Arabian Sea. So India is going to be one of the key areas which is going to be impacted by climate change, and it is going to result in quite a bit. Agriculture is going to be one of the key areas which is going to get impacted. Water, we are already in a cusp of things, because by 2030, we are looking at a big deficit in terms of water availability and all those things. So I think with all these things, the cost of water is going to be pretty high in India. All these kind of things puts us in a kind of a scenario where it is very important for us to consider what is going to be the business impact for it. And investors are increasingly pushing the real climate action. You are seeing asset managers makes the climate change as central to the investment strategy. Many of you would have seen right from, I think it was in 2018 when the first letter from Larry Fink came out, and since then every year he has been pushing. And I would say that BlackRock is somebody like a Greenpeace in the investment side as of now. They are turning activist in this space, and they are voting against the company managements who don't take this seriously. We have seen the first of the out-of-court settlement by an insurance company in Australia last week, where they did not, take climate risk into considerations, where somebody filed a lawsuit against them and they settled out of court. So a lot of things are happening around, whether it is the asset managers, whether it is sovereign wealth funds, whether it is pension funds. I think everyone, and you have also seen that people, the companies are committing towards net zero. Even Indian companies are committing towards net zero. So the whole of the momentum is going to be towards a low carbon or a net zero carbon economy by 2050, which would mean that every company will have to chart this path. And when I say chart this path, it is not kind of very clear in terms of how the things are going to play, because even now when we are talking about it, we do not know what is going to be the future fuel mix or an energy mix looking to be. But there are very clear indications that the governments, now that the US has also come back to the Paris Agreement, there would be more pressure on India. We are seeing the governments across are encouraging the climate-related financial disclosures. UK becomes the first major economy to pass the law. Canada, EU, all of them. And I think India has not yet committed into a net zero date. Whereas China said 2060 is what their timeline is, and there are other countries who have said their climate zero agenda, but India has not yet said that. But the pressure will build on, since US has come back into the Paris Accord, the pressure will build on, which means that when India sets its agenda saying that, let us say by 2050 or 2060, India says we would be net zero, that's going to be transferred into the sectors we operate, and that would be the industry segments where they say that then you have to chart your pattern. There would be a kind of a carbon tax coming in. All those things would happen. So there is definitely going to be pressure on the EBITDA in terms of the future course of climate change. Now, the whole of this climate financial disclosure, what is it? Now, the Financial Stability Board, which established this TCFD, they are the people under the G20. So it was the G20 requested the FSB to see how the financial sector could best take action on the climate issues, and they came out with TCFD. And TCFD released their first recommendations in 2016 and 17, and then the final recommendations in 2017. And since that, there are a number of organizations who have joined them as members, as well as there are a number of people who are a number of companies who are reporting against TCFD. Of course, you will hear from Amit later as to how Wipro went about doing it. Now, what does TCFD recommendations mean? So TCFD recommends disclosure by the companies in 4 pillars. The first one is in terms of governance. Now, the company's governance, how do you take into consideration the climate-related risk and opportunities? The second one is, okay, you are taking that into consideration. What are the actual and potential impacts of these risk and opportunities for the business, strategy, financial planning? And then you look into the processes used for risk identification, assessment, and management. You report on that. And then you report on the matrices and the targets used to assess and manage the risks and opportunities. Now, more than 1,500 organizations are currently kind of using the TCFD, and financial institutions responsible for assets more than 150 trillion are following up this. So you can see that I think it was last year where a group of investors came together and kind of wrote a letter to more than 40 Indian companies saying that why are you not disclosing on the climate related risks? So more than 500 investors with over 47 trillion in assets under management are currently engaging with the corporate to strengthen this disclosure around the TCFD. And we have a number of regulators, we have a number of central banks. The discussions are on with the RBI also. The UK Central Bank has kind of, as I told, it has become a regulation over there. The key features of the TCFD is, yes, it is voluntary as of now until unless the local country kind of makes it as a kind of a standard that you need to adopt. So as of now, it is voluntary. It is adoptable by all companies, and it is kind of a little sector agnostic where you can kind of adopt it very well. And it has to be, or it should be incorporated in the financial filings. And it is designed to generate a kind of a decision useful forward-looking information in terms of what can be the potential financial impacts of climate risk that the organization faces, whether it is supply chain, whether it is operation related. Of course, Amit would present as to how his company looked into it. And then the strong focus on the risk and opportunity, which is related to the transition of low carbon economy, because you need to transform into that low carbon economy, which means that is there a risk for you coming out from your products? For example, I was speaking to a metals and mining company earlier, and we were talking about how their customers are looking into net zero carbon and looking into kind of carbon neutral metal to come in. And the same is the case with most of the industries where everybody is looking into how they should move in. And you also heard one of the oil and gas major coming out with India's first carbon neutral crude oil, which came into their refinery as well. So a lot of things are happening in this particular space. The governance considerations, when we say very clearly, should bring out what is the board's oversight in terms of the climate related risks and opportunities, and also what is the role the management has in terms of addressing some of the things. And what does this disclosure implies? Very clearly saying that is there a kind of a mainstreaming within the company's organizational hierarchy, and what is the extent to which it is a material risk, and how seriously believe in tackling this. So what you see here is an example of a Royal Bank of Canada's annual report, and which kind of highlights how climate issues feature prominently on the top, where the chairman very clearly refers as one of the pressing issues, and also explains which function would be involved in identifying, assessing, monitoring, reporting, and all those things. So very clearly you can say how they kind of put it out as part of their annual report. The second one, when we look into strategy, it looks into the identified kind of risks and opportunities in terms of short, medium, and long term, and how this is factored into the financial planning. What is the resilience strategy which you are adopting? Now, all these resilience strategies, when you look into it, it is also linked to the science behind the climate change. So when we say that if we are looking into a 1.5 degree rise in temperature, which is what the global consensus is, that we have to limit our rise in temperature to 1.5 degree, which looks a little strange, but it is something which we can't avoid, which is an average across the world, which doesn't mean that every part of the world is going to rise at 1.5 degree or 2 degree rise in temperature. It is an average across the world, which means that in India, in some parts of India, it can be as high as 4 to 5 degrees, which would mean that many of the design standards which we use, for example, even road construction, will go for a toss. Because we are not designed to kind of withstand that kind of temperatures in the summer. So I think electronic goods and many other things would have challenges in what we are talking about. So very clearly bringing out what is the kind of scenarios which you are planning. How do you kind of look out? Here is again another bank, the Commonwealth Bank of Australia, very clearly saying is that how the climate impact is going to have potential adverse impacts. And they are invested into property, so how it would impact the valuation of the property. So very clearly bringing out as a what is going to be the impact and what is going to be their strategy around it. In terms of risk management, yes, the process of identifying those risk, management of the risk, and here what you can see is how well you integrate it into your ERM process. And the climate risk, whether they are well integrated into the enterprise risk management, and how robust is the company's risk management framework. And the example here is another bank from Canada, which very clearly shows that top and emerging risks such as climate change in the ERM, how it kind of uses the risk pyramid in the ERM structure and how they kind of take control of that. The matrices and targets are another one which the organization uses to look into the climate-related risks and opportunities. And when we talk about climate-related risk, we are also talking about opportunities. One, I would say, like, for example, healthcare and pharma would be one of those segments where there are a huge opportunity base, because what we are looking into is that the vector-borne diseases are bound to go up as climate change happens. You can see the first dengues detected in up north places like Japan and many other places, which is due to climate change. So you can see vector-borne diseases increasing, which strangely, I won't say good news, but there is an opportunity for the the healthcare segment. And likewise, it can be kind of opportunities in multiple dimensions for various sectors as well. So you kind of measure in terms of the matrices used by the organization to assess both the risk and opportunities, and then very clearly bring out scope 1, scope 2, scope 3 of your own emissions and related risk, because these emissions is your carbon footprint, and this is what, as part of your the overall transition to the low carbon economy, if you don't reduce this, is where you are going to get taxed as we move into a carbon tax regime. And the targets which are used by the organization to manage these climate related risks, and how you kind of monitor it against the targets what you have set. So here is a example in terms of Prudential's annual report, which clearly brings out what are their emissions and also what is their renewable energy target, how are they faring against that target year on year, what is their progress towards that. So all of those things are kind of very clearly brought out. I won't take too much of time, and I would say that the risks under climate can be kind of classified into both physical and transition risk, where technologies can change, market can change, your product requirement can change, there can be impact on your reputation, there can be policy and legal risk, all those things which will emerge, which is transition risk. And physical risk are the examples which I quoted at the beginning, which would bring. And the opportunities are on resource efficiency. In India, for example, energy efficiency is the biggest opportunity for most of the companies, and energy source, markets, resilience, all those kind of things. So I think very clearly what we need to kind of bring out is how this play down into your financial statements, what is the impact for your finances, both in terms of the cash flow, income statement, and the balance sheet. So Yes, the Indian companies, not much of progress. There is still a long way to go in terms of how the people are there. The winds of change are being seen in India. As I told, we already have a number of companies who are committing. 24 companies have committed to be carbon neutral. So I think that's a good sign. And so I think I would stop over there, and I would request Amit to come out there, because they are one of those companies who started early in this journey and now are a case study by TCFD itself. TCFD published a kind of a good practice guidance note, and Wipro, I should say, is featured in that good practice guidance. So Amit, congratulations on that, and over to you for this.
Thank you, Santosh. And while Amit's presentation loads, just again to remind you, if you have questions and thoughts, please post them in the Q&A and chat box, and they will also be addressed by both of them during the chat and the conversation. I'm delighted to also see Mr. Mahalingam is here. He's a chairman of our executive committee. So I'm sure after Amit's presentation, I'll request him also to share any thoughts that he has. Amit, over to you, please.
I'm sharing the presentation, Amit. You can tell me when to change the slides. Just a moment.
Sure. Thanks, Santosh, for giving this good perspective about what climate change is all about. I think I should start by saying we'll be very happy next time when you present a case study and Wipro also appears in that of your slide, because many of those we do as well. So it will be good to see an Indian company appearing in your presentation. But yeah, thanks for that presentation, Mr. Santosh. So let me start. So we will move to the second slide. So team, what I'm going to capture or cover around it, I think Mr. Santosh has talked about why this is critical and what is TCFD is about to do. So I'm not going to focus on that part of it. My focus will be completely on focusing on what Wipro does and which area we are going to do about it. So that's where I'll focus. So I'll quickly glance through some of the slides, and I'll focus only on the slides which are more what Wipro is all about. So Mr. Santosh, I think you have covered in this detail, so I'm not going to dwell on this. We can move. So team, this is again very important as we embark on our journey to understand, hey, what are we targeting? It's not necessarily we have to necessarily focus on driving a charter which is 1.5 degree or 2 degree. It's our call, hey, what we want to drive and where we want to focus. Because once we decide where our focus is, accordingly our goals will be different, and accordingly we will drive the journey towards that. So this just give a flavor, hey, what kind of impact it comes and what is the journey which as an organization we want to chart for ourselves. Yeah, Mr. Santosh, we can move ahead. Yeah, this again I think has been covered in detail by Mr. Santosh, so I'll not cover into. I'll dwell into in each of the area what Wipro is doing about it. Yeah, we can go ahead, Mr. Santosh, again. Yeah, we can move to the next slide. Yes. Yeah. So team, before we get into each of the pillars which Mr. Santosh talked about, whether it's a governance or strategy or risk management or matrices, let me give you some flavors of what Wipro has achieved in this journey over last 7-8 years. And this journey, like Mr. Santosh said, we have started fairly early. We are pretty much advanced in this journey, I would say, as compared to other peers. But yes, it's a long way to go for all of us. So this kind of gives us some of the areas where we have worked upon, whether it's electricity, whether it's a recycled water, or any of those. So these are the areas which we have worked upon, and it gives us a flavor of what we have achieved in each of this, whether it's a travel, whether it's a employee compute, or whether it's a solid waste, every of the areas. Just a minute. Sorry for that.
Go ahead.
Yeah, Mr. Santosh, we can move to the next slide. See, again, if I look at our annual report, it's fairly aligned with the GRI standard. GRI standard talks about the sustainability report, and our annual report is fairly aligned with that. So what does it cover about? It covers about not only the climate change, it covers about The another impact, which is on the recommended by the not only TCFD but also about the Climate Disclosure Standard Board framework, and our annual report is fairly complied with that. Yeah, Mr. Santosh, we can move to the. So team, let me kind of focus a bit more here. What exactly we do in each of the pillar. So if I look at the governance pillar, and Mr. Santosh talk about how does the board look at it and how does the management look at it. So it's fairly aligned. If I have to look at in Wipro, it is a tone at the top. So we have a quarterly reviews, which is done by the chairman, our CEO, CFO, CHRO, and it is a formal review where we review our progress in terms of the climate change, what are the targets which we have set for ourselves, how are we performing against those targets, and is any areas, any investment which is required for us to improve in that. So it is just not a tick in the box in our annual report. If you put this way, it's a good to have, but it is fairly rigorous process. There's a specific function which focuses on that, which works along with all the function across the organization to drive this charter. So it is not good to have, it is kind of must in all the initiative which we drive, all the work which we do. So anything which we do within Wipro as if any of the functions, we have to fairly align to this charter, and it is reviewed at an executive level on a quarterly basis, which involves our chairman and BOD. That's very important, and that's, I think, is very important once we embark upon this journey, because if it is not at the tone at the top, it will be very difficult to implement this. And today I can very proudly say in Wipro, it is at that level. It is fairly serious at the board level. I think we talked about the strategy, how the entire thing is working at a strategic level. So if you look at it, our enterprise risk management function and the sustainability function are fairly joined at the hip kind of a thing. So we do assessment of our entire change in climate on our impact on our risk, and we go location specific. It is again not generic. If I have to give few examples, and I've covered few examples here in the last, we have done at a city level, because every city might have a different impact of the climate change. If I look at Chennai, and we have seen in the past what was the impact of the flood which happened in Chennai, where the impact of the climate change in Delhi will be very different as compared to what it will be in Philippines or in Germany. So we do country specific or a city specific risk assessment. We have covered around 12 cities in India and few countries which is outside India. And we have come out with a clear game plan how a strategy has to be aligned and in those cities and those countries related to some of this impact. And this, we also work with some of the external partners, some of the reputed agency as we go along. So it is again, guys, it is not ticking the box. Once we come out with a clear strategy, we work with the local country and the local management, how we are dovetailing in our execution and operational work. So we are fairly well covered, and it does not become just a paper or a document which says we have done a good risk management, but how we kind of execute on this risk management. That is very critical, and we frankly have been made good progress in last couple of years in this. Our intent is to cover as many cities where we operate, where we have a large presence, but this is a journey which we have embarked ourselves on. This is again very interesting, which I wanted to just talk about it. We have specifically done a health survey with our employees to understand what kind of impact, and I think Mr. Santosh was talking about the vector-borne disease and stuff like that. So we also try to cover and understand, are we seeing those change? What are the impact we are seeing on our employee base? What are we hearing from them? And that kind of dovetails against in our entire risk assessment to understand what differently we need to drive to avoid or to mitigate some of this risk as we go forward. So we have done the studies in few of our locations which have a large presence, and we are working with the employees very closely to understand how we mitigate some of the risk as we go forward. Again, this is very important, and I think Mr. Santosh talked about it, and this is all the more important in the current pandemic, which we all have seen. How does our BCP teams, which works closely with the ERM team as well as the sustainability team, where we have a clear game plan, when the risk really happens, how as an organization we are ready to meet with those situations and able to function as an organization. We have seen this in the past when the Chennai flood happens, how we were prepared to work through, but this pandemic has kind of given this learning to all of us. And you would have seen many of, when I think it was fairly in the public news as well, as an organization, almost 99.5% of our workforce was able to work through home. And that's where again the BCP teams comes into play, whether we have evaluated all the risks. Some of this is risk, not necessarily climate here when you work through BCP, it's a larger risk management which you have to work through. Obviously climate plays a role, because if you look, Chennai was exactly that example where there was a complete flood, and how do you kind of deal with that situation. But in the current pandemic, it was a larger BCP which has to come in play, and how as an organization we all are prepared to ensure that the organization continues to run and function, because this has a huge impact on the financials. It has a direct impact on our revenue, direct impact on our profitability, and more bigger, it is an impact on our reputation and the way we support our customer. Because many of our customers we support 24/7. So how do you ensure that none of our operations get impacted across the globe, and the client operations does not get impacted because of our operations? So again, very, very tightly linked team. These are the three teams which has to come together, which is the enterprise risk management team, the sustainability team, and the BCP team. And they work with then the first layer of defense to ensure that there's a clear game plan in case of any uncertainty happens. How do we manage the operations? Here again, I think Mr. Santosh talked about what kind of a risk which we look at when we do our risk assessment related to climate. We look at physical risk. I talked about some of the physical risks in terms of the hot days, heat wave, waterfall, rainfall, some of the health related risks, which is the heat stroke, vector-borne disease, again Mr. Santosh covered about, and the transitional risk in terms of carbon tax coming in. Means how does a regulator change impact any of the organization? It can be impact on our operations, it can be impact on our bottom line and the top line. So all the risk is fairly evaluated when we come out with our risk plan, and we decide our strategy, how we want to move forward. Again, we have fairly detailed down our matrices. It's a clear target which we have set for ourselves. Right now, our targets are for 2-degree temperature goal. We are obviously working, we are work in progress. How do we meet 1.5-degree temperature goal? That is in progress. Hopefully, we'll come out with a target. Right now, our targets is set for 2020 and 2030. And we have laid down our target in each of the areas. If you look at it, emission reduction, energy intensity in terms of EPI, GHG emission, renewable energy. I'm not getting into any of the numbers, team, but the entire focus is to say we have detailed out, it's a clear goal, clear target, and this target is not again left at the sustainability team. It has gone to operational team, it has gone to our facilities team, and we track it, monitor it. There's a monthly MIS or dashboard which get published to say, hey, are we on track or we are not in track? So it is just not good to have data, but it is the way of life for many of the operations team and how they function. Again, I'm not going to get detail of it. It just gives a flavor saying how do we measure, how do we monitor. This is the last thing what Mr. Santosh talked about. Wipro is a founding member of Transform to Net Zero. We have committed ourselves that we will achieve this goal of net zero by 2050. We are working with a lot of our peers, customers as well. And I think this is a good journey which we have embarked on. This basically gives us lot more, I would say, governance around it, how to achieve some of the numbers which we have laid down for ourselves. And we are very, 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 very excited about it as we go in this journey. I just wanted to kind of leave the thought, it is just not good to have. Why I say it's not good to have the kind of operations which we run, where we are operating in around 50 plus countries and workforce of 200,000 people, where a lot of our workforce is millennials. They kind of associate Wipro as a brand with how are we committed towards the climate? How are we supporting the climate change? So that's the reason it's very, very important for us to just not to have good to have in our financial report, but how we live by. And that's fairly reflected in many of the things which we drive, many of the initiatives which we drive at organization level. And many of the initiatives are driven, I would say, bottoms up, where employees participate in that. They look into, hey, how they can contribute to this entire journey and how they can make it much more meaningful to the organization as we go ahead. So I think that's what I just wanted to cover, and we'll be happy to take any questions from you.
you, Amit. And I think it's wonderful that Wipro is at the vanguard of making these steps. I'm sure many will be inspired to follow your example. Please feel free to ask questions. I see many of our board members here. Mr. Malingam, would you like to kick off the discussion?
No, thanks, Pranjal, and really compliment both Santosh Jairam and Amit Bajoria on this excellent presentation. Of course, the TCFD is something that all of us are interested in. But there was another angle that I was looking at, which of course is not necessarily covered by this presentation, because many of the boards that I'm sitting on at this moment in time are asking for the climate change related or coming under the ESG umbrella and so on. And one of the things is from a strategy point of view is how do we go ahead? I'm just relating to Wipro example, for instance, because I come from an industry, the same industry. What happens to the client portfolio? Is it likely to undergo a change as a result of climate change? I mean, Amit already talked about this company going bust in California, which obviously introduces a certain amount of risk. So I was wondering whether there have been any progress in terms of even measuring the the impact of the business. Just to add to that, there is another company that I'm involved in where there is it's a financial company where there is essentially strategic orientation going on as to whether there are some segments that one needs to get out of, mainly because of the impending climate change kind of regulation, because automobile is affected in some way and so on. So I'm just wondering whether there have been anything, or if it is really outside the scope of this, then we can leave it.
No. I think thank you very much for that question. And actually, Amit definitely would talk about it, because I think as part of their climate risk, they studied their whole portfolio of customers. Okay, they clearly brought out the risk from various industry segments in their operating. I think I'll leave it to him to talk about it. But I would say is that the Bank of England has made it mandatory. Now all the banks have to do a climate stress testing on their portfolio. And Citibank has started monitoring the climate footprint of their portfolio. So from the financial sector, the initiative have already started in terms of what is the climate related stress on their assets and how they should be moving ahead. So if you look at Bank of America, if you look at Citi, if you look at HSBC, everybody has a clear that these are the portfolio, or this much percentage of my portfolio is at high risk, moderate risk and low risk. And what are they going to do with that high risk, moderate and low risk is very clearly laid out as part of their annual report.
Yeah. So I'll just add to that, Mr. Malingam. Thanks for bringing that out. Like what Mr. Santosh said, one is what bankers are looking at their portfolio. They are also looking at their partners or supply chain partners whom they are working with, how they are committed to it. So today it is just not good to have. So you are not even invited on the table for many of the customers when some of the things you are not complying with or you are not driving towards. So one is toward their portfolio of investment. As they expand their supply chain network, this becomes very, very critical. Now today, many of our customers, as part of their RFP or as part of their due diligence, they want to understand, hey, how is Wipro strategy, or how are you doing it, and how can you support them in that initiative as they move forward in the journey, since some of us have moved ahead. So that becomes a very, very important discussion, any of the evaluation process which we go through with our customers. So it is just not good to have. If you are not there, you might not be on the discussion table itself today with many of the clients.
Good. Thanks. Good.
There's a related question on the chat. There's a related question on the chat from Rajiv Pandya, who is a delegate. For wide-scale adoption, it's important to have formal training program. Also, smaller companies may not have the bandwidth to gather complex data and evaluate its impact. So is there something happening to drive a wider adoption amongst the mid-sized companies? And I would request both Santosh and Amit to address this.
Yeah, so as Amit just now mentioned, it's across the supply chain which is happening. So if let us say a BMW says they will be carbon neutral, or if somebody else says they will be carbon neutral, it will be throughout their life cycle, in the sense that they are going to kind of track it across the product's life cycle and ensure that it is carbon neutral. It's not inside their own four walls. In that case, it will be more like one of my clients saying, I reduced 30% of my emission by outsourcing my painting operation. No, that's not the way forward. So I think it is going to happen across and these are the people. So if you look at Puma, for example, they go up to 5th tier of their supply chain to measure their carbon footprint. So it's already happening, and it would be driven by the brands, it would be driven by the big people, and as Amit mentioned, that if you are not there, you're not in the table. So I think that is the drive which is going to happen. And what is currently happening is the big investors pushing the brands, pushing the big companies by saying that you need to commit to net zero, which in turn push it down the supply chain. So that is the manner in which, yes, I agree that there is quite a bit of trainings, capacity building, all those things which are required, which is something which has to happen. And that's something which would kind of start happening now, as and when things are getting more stringent. Yeah.
Amit, would you like to add anything?
So Prajwal, definitely, I think a lot of training and things will evolve. I'll be honest to say, I don't think a lot of trainings or things are happening around it. I think it will start. I think the institute will start picking it up, whether it's any of the institute, whether it's a chartered institute or any of the other bodies. I think a lot more work has to be done on that. But what is happening, Panjal, what we are seeing as well, one is the supply chain, which I talked about. I think it's a lot more getting demanded by the employees itself. When you work with the millennial, which I talked about, or Gen X, which I talked about, they want to associate themselves with, hey, is the company which I'm working about is concerned about the climate? Is it the right set of company which I'm working about? So once your employees start talking about it, then automatically as an organization, as a function, you start thinking about it. So I think that a lot more we are seeing around it. And when you work across a diverse set of people or nationalities across 50 countries, I'm sure this is where people resonate with and connect with. And I think that drives a lot more adoption. So what we are seeing, it's a client on the forefront, which is definitely driving the entire supply chain discussion, and employees on I would not say back end, but that is the core. Again, they are saying, hey, are Wipro committed? How are you committed? What are you trying to do around it? I think that will start driving adoption. And once people see that, I'm sure a lot more training, a lot more courses, all will come around it. I think training and courses, I would say it's like going ahead of the curve right now. I think we have to drive internal adoption, then training and all will follow. That's my personal view.
So just one couple of pointers to just add is that Pranjal, is that what we have seen till now, the space of what we call as ESG, under the E comes the climate change. Of course, it has got social connotations also, but the space of ESG was something which was good to do until about 3-4 years back. What has literally changed is the link to finance. And in 2020, that threshold, or what we can say is the tipping point, happened. And now no finance is going to come, at least the big patient finance is not going to happen. And we are seeing very clear statistics. To give you some things, like we are seeing, in the S&P 500, we are seeing almost about valuations up to 20 to 30% on market value on ESG leaders versus laggards in the same sector, okay? On the S&P 500, we are also seeing, in terms of the debt side, we are seeing a 200 basis point difference in terms of how they can access cost to capital. Okay, so very clear indications. Now, it is not just, in S&P 500, now it is not US related as well. We are talking about India. Let me give you Indian examples. The MSCI ESG index has outperformed the normal MSCI index year on year, and just in the last year, I think it is about 7% plus. And the Nifty ESG index has outperformed the Nifty by I think about 4% or 5% last 3 years. And you have seen 5 new ESG mutual funds coming in India only in 2020. Just in 2020, we had 5 ESG mutual funds come in. And you are seeing the first ETF, ESG ETF in India. So I think the big shift which has happened is money is now tracing ESG, and that is where the big shift is happening, and that is where the climate related things would happen, whether it is on the equity side or whether it is on the debt side. Things are pretty clear now.
So thanks, Atish. The question is also more specific about small and medium companies, because while big, companies like BlackRock, etc., have dedicated funds for SDGs, and they are now pulling out their investments from companies who are not SDG compliant, or at least are not keeping a track of the carbon footprint. The real issue is about the tier 2 and tier 3 companies, which is really at a mass level. So I'm not sure whether there are funding mechanisms available from various, because A, there is a cost of physical compliance of sustainability, and B, there is the cost of financial disclosures related to the activities that you've done, because obviously there's a cost and return aspect to it. So I think that's the real question, which again, there's another related thought from Vivek Sharma. I'll read out the question. In your experience in dealing with suppliers and customers, what are the biggest incentives to onboard themselves for the cause, and how are organizations like Wipro, for example, are you influencing or as to quote Vivek, to say, are you fueling it further? How do you make sure that people are incentivized? Is it carrot or is it a stick? How is this playing out, and how do you suggest it should play out? Because it will have to also be a collaboration between policymakers and corporate India.
So Pranchal, I'll add this way. I don't think it's at all a stick approach. I don't think stick approach works some of this adoption. If you want to drive adoption, it has to be carrot approach. And how does the carrot approach work? Again, obviously you work with the regulators and the bodies or the government bodies for driving adoption of it. That is on the one part of it. But like for us, like the way I was explaining, when you work in a larger supply chain, and Mr. Santosh talked about it, we work with our customer and we are part of their supply chain. And we become, since if they have to be carbon neutral, we are part of the same supply chain. And once we work with our partners, and the partner can be MSME, SME, and more focus will go through the partners who are again ESG compliant, focus on ESG, because that's where the entire chain will get done. So it is all about saying, hey, if you want to play part of the larger global supply chain, you need to be carbon neutral. You need to be ESG compliant. We are not saying, hey, everyone, that's where I said, not everyone needs to be adopting and achieving minus 1.5 or minus 2.0 goal in next 5 years, 10 years. Every organization will chart their journey and how they want to achieve. But if you want to be part of the global supply chain, it will become one of the very, very important index. Second thing, like what again Mr. Santosh talked about, a lot of money is now following this. If you want to be part of ESG fund, if you want to get invested by any of those guys, then you need to invest in some of this. It has a long-term play. I appreciate it will be a short-term cost associated. Any adoption requires sometimes a short-term cost, but the long-term benefits will far out, and hence we believe a lot more organization will get into this journey as we go forward. Yeah, obviously lead has to be taken by the bigger organization and larger corporate, which is already we are seeing a lot more traction around that. Not only in the globe, now in India as well.
Santosh, are there any cost mitigating structures available, some kind of funding for especially the tier 2 and 3 companies?
Yeah, so what I would say is that people are kind of allocating specific climate finance instruments. So I can talk about, I think there was one with Walmart and HSBC put together for their suppliers in terms of a climate finance mechanism. And likewise, I think, if I'm not wrong, Unilever at some point of time raised a green bond for their factories, which included contract factories as well, as to how they can. So I think there is a particular segment of allocation which is happening towards climate finance with almost all the banks and all those things. I think very soon it will happen in India, like the preferred lending or a preferential lending. What is it called for the banking segment? It's called a particular terminology that the bank has to lend to that. And
priority sector. Are you referring to priority sector?
Priority sector lending, yes. I think this would come out as a priority sector lending in India very soon. I hope so. So I think with all those kind of things, because I know that there are streams of funding internationally available. And I know some of the private banks in India are already sourcing those streams of funding. So there is a stream of funding on energy efficiency. And I know a couple of private banks in India have sourced that to use it in the MSME segment. So I think this is kind of already starting to happen, and it will only increase. So there is more and more opportunities for them to source funding for this.
Thank you. Any other question from anybody? I see our board members, Jatin, Jay, Neeta, and Nitin also here. So any questions from you?
No, I think Pranjal, a great session, very, very relevant and pertinent topic that we picked today. So thank you, Santosh, and thank you, Amit. It has been great. Yeah.
Thank you. Mr. Malingam, you said you are on several boards. So is there awareness among the boards about these issues, and are there any concerns regarding these in terms of, how does a company transition to this? Because it also is a corporate transition to a new ecosystem and a new framework.
Yeah, in fact, Santosh talked about it right in the beginning when he said that many of the investors are starting to pay a lot of attention. In fact, they are walking out and so on. So that is really the motivation. In fact, in a sense, you can say it's a negative motivation. Although Amit said carrots work and stick not work, and there's probably a case of a stick working, where they essentially they're worried that people might go away from investing in that company and so on. So there is, for whatever reason, there is talk in the boardroom in terms of what we need to do from a climate change. And in fact, Amit's presentation was very, very revealing in terms of the extent of effort that goes into it and the metrics that go into it and so on. I'm not sure that many people have gone to that kind of level, which is a important one. But I think, my own suggestion is that now it is really just a talk in the boardroom. And now CFO board, I think we need to do something in terms of catching it at this stage. This program is a great program. We have got to ensure that a lot more people get sensitized, even our own members, a lot more get sensitized. And I think we need to work with both Santosh and Amit to see what more can we do. And we'll have to look at some of these domain specific, because all said and done, every industry has a major issue with regard to climate change, and we need to address that. So that's what it is beginning, but I think we need to shape that even as CFO board.
Right, sir.
Pranjal, if I may just add
Sure.
one point here with Mr. Malingam made, is that this journey obviously is, people are not familiar with it, and it's not an easy journey, and therefore the commitment of the board to drive this agenda for the company and hold the management accountable is also going to be an important element of how this will play out, because otherwise it's unlikely. And while companies under pressure will make commitments of going net zero in year so and so, but the probability of failure is very high. And if you see, I don't know if Santosh made this point in the beginning, that there are bonds now which are linked to achieving objectives, right? And there's a penal interest provision that is coming in and things like that. So I don't know how this is going to evolve, but the problem that we will face is that if the companies fail to meet those requirements, there is actually a financial cost coming in, not just from a business standpoint, but either from customers or from lenders or investors. And I think that makes it really real for commitment to be fulfilled. So I think that's one part which also needs to be appreciated. It's not just that I'll get better financing or a higher investment, higher valuations, but the negative part of it if you don't do it. So to some extent, Amit, the point that you were making, there is a big stick also, which seems to be coming through in this whole thing.
No, it's true. If I can just add to that what Nitin you just said. One is on the bond market, but if you look some of the regulator like UK or Germany today, they are evaluating whether there should be carbon tax or not. if tomorrow there's a carbon tax which can come into play, it impacts all the global corporation which operates in some of this country, and it will impact our bottom line. And once it happens in 2 countries, I'm sure others will follow suit. So it is not far out when some of this will start impacting more straight to the bottom line today, which is not seeing that visible in the bottom line. Today, we know customer wants to have a discussion. He's saying, hey, you are part of my global supply chain if you are committed to some of those. But you're absolutely right. Some point of time, they will say, hey, if you have not met this 2-3 numbers, you're not even invited. Maybe today they are not gone to that path, but we are very sure that that path is not far off, kind of a thing. So yes, it that way it will play. Some point of time it will become a stick, and then people will know the choice but to start complying with it if they want to play in the larger game.
You know, Pranjal, you asked a question about other boards and so on. I'll tell you one thing. Independent directors are taking it very seriously. And in fact, in 3 listed companies of which I'm on the board, in the independent directors meeting which just took place around this time, there has been extensive discussion on how the company is really looking at climate change. So I think, independent directors are getting worried that, the responsibility could be put on them that they didn't do this properly and so on. So board evaluation process is starting to take this into account. So this is the right stage.
So sir, just to add, there are a lot of activism shareholders. Now they are asking board, hey, what are you going to do about it? So they are also worried from them. Some of those comes to India a bit later, but globally, if you look at it, a lot of activities, shareholders are already asking the board those questions. So that way it becomes as more important for the board also to start paying attention to some of these points as well.
Correct.
Santosh, is there we have 2 or 3 minutes left. One quick question I had was, do you see differences in approach or advise any differences in approach across different verticals? Because the impact on services versus manufacturing versus, food processing, for example.
So, the impact is going to be for everyone. So if there is one sector which says we will not be impacted, that would be kind of a little irony, or so it is going to impact everybody. Now the question is, in terms of the from where the impact is going to happen. So for some of the players in the food industry or something like that, there is a direct linkage with the agriculture, and that is going to get impacted very severely, because farmers are going to kind of change the crop patterns. Fathers are going to change their crops, which would ensure that, how do you ensure that the product what you want is going to be, I mean, already it is happening. I know a couple of the organizations said that the chili what I wanted in my product, the farmers are not growing anymore. So it's kind of very clearly coming out saying that this is going to kind of impact them. Or for example, the oil and gas or a power sector, all those things are pretty clear. I won't get into it. I think automobile is very clear. And as Amit mentioned, IT services, it is clear with the presentation what he made. The banking sector, we said it is pretty clear. So I think across sectors, it is all, and healthcare, I said, there are opportunities. Now, if you don't take up that opportunity, that is a risk for you. So it is kind of the upside is something which you don't capitalize. It is the downside risk. So I think with that, if you really look at it like energy efficiency, Schneider floated the first zero coupon bond, which is linked to the impact what they will create. So if the investor is investing into the Schneider's bond, they said that you're not going to get interest, but if with this bond, if we don't create the climate impact, we will pay you 50 basis points additional. So I think for everybody there is an opportunity here, and there are numbers floating around only for the food and allied industry. I think in India they are talking about some 3 trillion opportunity or something. I don't want to get into those kind of numbers, but then there are enough numbers floating around there. There is opportunity, there is clear risks associated with your supply chain, with your products, with your own products in the market itself. There is a higher risk as well. So I think for every sector it will play. It is very important, and it is also important to kind of look into what will be the possible scenarios in the future. Right. So the scenario planning and then identifying the risk becomes very critical.
Right. So once again, I'd like to thank you, Santosh, and special thanks to Amit as well for sharing the experience at Wipro for this really important issue, which sometimes I think gets ignored because it may not look urgent, but it is definitely very, very important issue that everybody